Hello, Maverick traders. This is Rob Reinhold. It is March 4th, 2025. Let's jump into the day. Crazy day, big intraday swings. We're going to talk about the day. We're going to go through these markets. We're going to look at the market scores. And then I've got two trades for you, one long, two bears.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Let's get into the numbers. All right, the Dow Jones fell 1.5%, the S&P down 1.2%. NASDAQ actually had a really nice reversal, was down 2% at one point, was up over 0.5% at one point, closed down a little bit. And we had the Russell down. We talked about the tariffs that were enacted by the U.S. yesterday. Well, today we got the retaliatory tariffs from Canada and China announced that they are putting their own tariffs on U.S. goods. So the trade wars have officially begun. Now look, I'm not making a political statement here. This is not good for economic growth. We've already seen revisions to economic growth to the downside because of these tariffs. Like I said, it's not a political statement. There is unequivocally no question that in the short term, this is going to damage growth. The question is this going to be worth it in the long run? Time will tell. But in the short run, these are definitely negative for the markets going forward. And we have some wild swings. So we have really rising high volatility. And we've got these swings in the market. And let's take a look at the chart. Over the last 2 weeks, I've been very, very clear that I thought the market was likely going to go lower. But I couldn't become bearish until this 58.40 broke. And not only broke, because we've broken it before in the past. We broke it on this day. We broke it on 3 days here. They all broke below that point. We broke below it yesterday. But I've been very clear to say, okay, we need to see a break, a rebound, and a failure. That to me is going to be a signal that this is a bearish market going forward. That's the bearish trend. And once that happens, I can absolutely become a lot more bearish. And again, making lots more negative delta trades and a lot more rising volatility trades. Look at today's candle, and I really want to focus on the intraday price action. We had a big fall, gap down, fall, and then you can see we rose pretty much all day long, but take a look at the volume during that. Really low volume, and then a big plummet at the end. I've been trading now for 28, 29 years, somewhere around there. I have watched hundreds of thousands of hours of candlestick formations on charts and watching the markets. I'm going to give you my opinion of what this kind of day is like. I'm not a conspiracy theorist. I don't allow myself to believe in conspiracies because I don't think that does me any good. There's a lot of people out there that say, oh, the market makers or there's a cabal out there running the market. Look, that may or may not be true. It doesn't help me. It doesn't help me at all as a trader. So let's talk about what I see in this chart. And I haven't seen this kind of day in a long time. I saw it a lot in 2000, 2001, saw it in 2007, 2008, and in 2011. But the last time we had a bearish market was 2022. And I can't remember if there was days like this, so I can't comment on 2022. 2020 and COVID was totally different. That was just a free fall. That was a free fall. We didn't have any days like this. But this to me is what I see in this chart. We get the selling that happens in the morning when the volume is there. And then all of a sudden the volume dries up. And if I am a trader on a trading desk, and look, there's two different kind of traders. There's discretionary traders, and then there is what I call execution traders. And execution traders just place orders that come across the desk from institutional clients. So basically they'll get an order that says, okay, I need to sell 1 million shares of Microsoft. There is an art form to selling 1 million shares of Microsoft at a decent price. You have to sell when the buyers are there. You can't just be hitting market when there's no buyers out there. And so if you know that you have a ton of sell orders that are going to be coming across your desk later tonight, like an institution said, hey, we're going to be liquidating 10% of our portfolio, we'll have the orders to you by noon, you know at the end of the day, you were going to have to sell a lot of stock. And in the morning, the market wasn't there. There wasn't a lot of bid, but once the sellers ran out of gas, these firms come in and they start to buy. They start to push the market up. And when they start to push the market up, they trigger some short covering, which is more buying. They trigger the momentum traders. And they were able to work this market up 2% off of the bottom. And when it finally came time for them to sell, they had a whole lot of room to sell into. They had a whole lot of price to where now they can just be hitting market orders and just dumping stock. And take a look. They still ended up with better prices than low of the day. I can't prove this. This is conspiracy. It does you no good to believe it or think that there's some shadowy organization behind this. But this is my opinion of what happens. And when I see a day like today, it tells me that institutions are liquidating, and that does not end in a day. So I do think there is significantly more selling that is likely to come into the market, but until the market breaks, I cannot get bearish. Take a look at the heat map and then discard it. Pretty much everything's red. Right now, I am at a -1. I've been very clear that we've been in this area for a while. We've been in this sideways pattern for a while. The moving averages have been flattened. They've been crisscrossing. Everything tells you a neutral market. I'm very close to being able to go to a -2, which is a very more bearish market. We need to see the breakdown, the recovery, the bounce, and the failure. Once that happens, we'll go to a -2, -3, but until that happens, we have to recognize that we are in this sideways pattern. So let's go ahead and look at some potential setups here in this market. When I was looking at bulls, there obviously weren't all that many bulls, but the ones I found, I ended up finding a lot of Chinese names. And whenever that happens, and we're in a market like this, it's crazy that individual stocks are just going wild. ETFs are a great place to go and play. So this is the Chinese Internet ETF. This has been holding up nicely. And you can see it's looking much, much different than the S&P. We've got moving averages that are rising. We've got higher highs. And we've got pullbacks. Everything looks like a bullish market here. And we even got a nice bullish candle today. It was up 2.6% today. That's a nice day. So when the buyers came back into the market, this is where they came. All right, so nice bull pullback here. What happens? Okay, I'm not saying this thing's going up to 40, not at all, but we can make a bullish play. So if you need to make a bullish play, this is a possibility of 34, 30, 35 bull call spread. Probably cost you 35 cents. You got 65 cents of upside. If you want to be less directional, 33, 35 bull call spread. That's going to cost you $1.10, $1.20 maybe, and then you'll have the rest of it in upside potential, but it will be a sideways to bullish trade. The way I like to play these bulls in these really negative bearish markets is I like to give you more time. Where typically I'm around the 2 to 3 week time frame on my options trades, I'll give this one like 4 or 5 weeks. Now what that does, it basically is a call that says, hey, I don't care what happens over the next 2 weeks. I obviously think the next 2 weeks is going to be wild. Nobody knows what's happening. We might even get a big drop over the next 2 weeks. But if I give myself enough time, 4 weeks, 5 weeks, I'm basically saying that I think in 5 weeks from now, all of this tariff stuff has been resolved. The markets and the economy are back on track. And I found a strong sector that is likely going to rebound. All of a sudden, you can sit through a lot of that crazy volatility that is highly likely to happen. So I think you either need to be super short term or more long term when you're going to be placing bulls in a falling market. On bears, I think you can just be aggressive like a normal trader in a normal period of time. This here is Coinbase. I love when you have a stock like Coinbase or even like a gold stock or an oil stock that tracks a commodity. So again, when oil goes up, it pulls all the energy stocks up with it because it's good for their business. And when oil falls, same thing. Same thing with gold. Same thing with crypto on Coinbase. When crypto is going up, It's usually very good for Coinbase. When it's going down, it's bad for Coinbase. Here's what I love. I love when like oil goes up and you find an energy stock that's going sideways, that's not participating. When oil finally falls, those are the stocks that tumble because they were so crappy that they didn't do well when oil was doing well. Coinbase was basically going nowhere the whole time. Bitcoin, Ethereum are hitting all-time highs. The second they crack, it falls apart, and you can see nothing here. It still is going to be tied to cryptocurrency, which is why we got a little bounce today. Crypto had a nice little bounce off their bottom, but it's just a low base. I like this one quite a bit. I think you can do like a 200, 220 bear put spread. If you want to be less directional, 210, 220 bear put spread on Coinbase. Next one is Flywire. I've never traded this before, but it came up on my screener. You can see we got a gap down from earnings. We had a little rebound that day, and then we have been going nowhere. And a couple days later, people said, you know what? There's our confirmation. We're now trading below these last candles. I'm not looking for this thing to go to 9. I'm looking for this thing to go below 10. So I'm going to do a 10-11 bear put spread. That's going to be the play on this one. 2 weeks out, the March 21st options expiration. Let's wrap this up. I still have no clear market trend, and it's getting closer to where I can say there's a clear market trend. But until we get that break, that rebound and failure, I can't go there yet. So I still need to play sideways to slightly bearish. That's just where I have to be. We have 2 economic reports tomorrow, ISM services and ADP employment, a couple of tech earnings, and that's about it. Expect there to be a lot more market volatility, a lot of intraday swings. Again, this is just one of these markets where if it doesn't fit your trading style, just sit it out. Sit it out and come back when the market does. Thanks for joining me. Goodbye, everyone.